Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 9th, 2021. It's a little after 12 o'clock Eastern Time as I'm starting the video, and what I'm going to do in this one is I'll cover a handful of stocks. I have about a dozen stocks in the educational and training services sector. So some of these that stand out to me are actually Chinese education stocks, online education stocks. Some might be based in the U.S. I haven't really done any due diligence on the fundamentals of these. The charts stand out as potential trade setups, maybe even some actionable trades in here. What I mean by that is a trade setup is a potentially bullish or bearish trade that is waiting for a catalyst or a breakout or a buy signal or a sell signal. So, for example, back here, back in 2018, heading into early 2019, you had a beautiful bullish falling wedge with positive or bullish divergence. So, that's a trade setup, and then boom, when you break out right there, that's your buy signal, and there's the trend that followed. So the stock rallied from about on the breakout point about 580 all the way up. Before said and done, it rallied for a few years about 238%. And then you had a bearish setup. You had a bearish rising wedge, a very well defined, nice clean uptrend line right there. Breakdown was your sell signal, and it never looked back. From that breakdown point, the stock fell 90%, and that's what you're going to see on a lot of these. I'm going to throw out caution. A lot of these are low priced. I'm going to start out. Oh no, they're not sorted by market cap right now. I went through the entire group. There were dozens in there, many dozens, and I went down when the market cap started getting really small. I stopped. I'll try to point out this one's a bigger one. This is a $3.4 billion company. So, and it's also not in penny stockville yet. A lot of these are. Some of these have already dropped down there below, dollar a share. Anytime a stock's below $5, typically higher risk. Usually, there's no set hard rule, but that's it. All right, so I'm just going to go through these. Take them if you like, pass if you don't. That's your decision. There was a downtrend line, but nothing really happened there when it broke out. So really what I'm looking at here, the key level is about 254. This stock has been trading in a range between about 254 and roughly $1.77. You can trade that range, but the reason these stand out to me as long side or bullish setups is number one, they have virtually zero correlation with the broad market, the U.S. equity market. Again, some of these being Chinese companies, and some being in this niche educational sector. Obviously, you can see what they've been doing lately, while the market's coming off all-time highs right now, and so that's by looking at that, it's almost an inverse correlation, but it's not. There are times I'll track the market. But bottom line is the market can do what it does. It can go up, it can drop, 30%, and it may not have an impact on these because they're not typically big index holdings. They're not in the S&P 500 or the NASDAQ 100 for the most part. All right, so that's it. This right here is the MOAG, the mother of all gaps. Look at that gap. That gap down from about 580 all the way down there to around under $3. And the way gaps work is that's the thin zone. Stock usually once it enters the gap, and although technically you had a reaction up there, since we set up in this trading range, again, it's at 254 area. So if you can pop that on high volume, ideally you want to see a intraday breakout on high volume. If you want to play it safe, you can wait for a daily close. But a lot of times, if you have these coiled spring action, this trading range, by the time this one closes a day, it could be up 30-40%. Hard to say, but the gap itself, if it's backfilled, would be from the breakout point from 254. That'd be about 127%. Now there is some. I'm going to put it here too. There's some reactions back here when we bottomed in late 2018, early 2019. So that's where you'd probably be safe for targeting. Too many eyes would be looking if it gets up there 581. And you could certainly just raise your stops and let it run, but that'd be about 100% return if you get there. So there's a setup, big divergence building, and need to see a pop 254. We'll call it 255, 260 if you want to be safe. And again, relatively low price. So I like to take a shotgun approach. I don't know of an ETF, and even if there was, I went through all these charts in this education and training services sector, and some of those look bearish. So This is a case where I wouldn't, if even if there was a sector ETF, I'd prefer to just take a basket, a handful of the most bullish setups, the ones that I'm covering in this video, and trade those. And you can just sprinkle, most brokers' commissions are free or a couple bucks per trade, so you can easily diversify. Even if you don't have a lot of money, you can diversify among a half dozen or a dozen stocks in the sector. Again, if it's something you're interested in. Next one, TAL Education Group. Common theme on a lot of these: big, strong divergences or potential divergences building right there, positive divergences. Also, a lot of these have these big monster gaps above overhead to potentially be backfilled at some point. Again, this one, well, there's the gap. We gapped down to there and we kept falling, but that's really your thin zone. You can see it here on the volume price histogram. These are my bars, and that tells you that that's where the majority of trades took in. So there's your thin zone right there, and that's a potential target. I know it's a huge target. From if we enter that box, just to get to the top of the box, you're talking about a 200% return. And trading, to me, it's all about risk reward. These might not be the highest probability trades. These stocks look like they've been left for dead. But that's I'm also seeing in quite a few of these what may be potential selling climax lately. Drops on increasing volume. And if you're shooting for a 200 or 100% gain, you can use a 20-30% stop loss, and you still have a nice risk reward ratio. And like everything else, some trades work out, some don't. You diversify. It's all about. There was our trend line. There was like a lot of these had these big divergent highs at the top before they broke down and back tested. So that's that. TAL entry point. You know what? On this, yeah, there's a level right here. I'll give you this. And what I like to do is watch the sector, at least this handful that I'm covering now. If just one pops, even if it looks good intraday and the rest haven't broken out, well, there's a good chance that one may fail. You can take it, but don't fall in love. Use stops on all of these because you could fall back down in there. But that one's roughly 577. Solid break above that should do the trick. And again, then you just maybe scale in, take a partial position, and if the rest of them are breaking out, you can add to that, layer in, and bring the position size up as we start to move into that thin zone. HLG, I don't know, I can't even pronounce it, probably a Chinese company. And there's the decent support. You had a reaction back here, all the way back in 2017 on about 1710. We kissed that the other day, and it's been moving up. And let me try to see if I can make out the volume. Volume's not great. It's decent. It's not bad. But just watch these. If you continue to see that one push up, there may be a trade to be made in that one. That one looks relatively thinly traded, I can tell when I just look at these candlesticks. That's a thinly traded security, and a lot of these are. So again, I throw out the disclaimer, if you will, or the hey, don't take this if you're not an aggressive trader, because these are 1,000% counter trend trades. They're in unmistakable downtrends. But again, I think that's why I'm highlighting these. They look like they could pop soon. So that one really off support on around 1710. You could take it now if you want to, put a stop somewhat below, because the target would be the downtrend line and or that 2990-ish level right there. Next one up, PRDO. And this one has a nice falling wedge type pattern. You have a clean downtrend line on the daily. Nice, well defined. It goes back to 2019, mid 2019 right there. 1, 2, 3, 4, 5, 6, and now 7 distinct, well, no reaction yet. 6 distinct reactions, and we're at the trend line now. So if it pops a trend line, it'll probably run. It's my kind of chart pattern. Target right there is about 14. Move that down. Maybe sell a hair below 14 to be safe. And you can see bullish divergence has been building down on the indicator. So there's a nice looking setup for you right there. And this one's a $763 million market cap company. If we do get a breakout, again, you got to break the trend line. About 23% rally to that first target. I'm going to do an update on the markets after this. Again, these may or may not be impacted by what happens in the broad market. But if we can get some upside traction, this one gets going. Potential second target there around 1734. But right now, let's just look at that $14 target, and we'd most likely get a reaction when we got there. I think that's get there if we get there. Pretty good resistance level, and probably even see here. Let me give you a first target here for those of you that think that first target's a little too aggressive. We'll add first target here, 1250, and then 14. REDU, Rise Education, came in limited. Nice bullish divergence forming. We had a divergent low right here. See that? Boom, boom. That was a divergent low right there, and you even had a trend line. I wasn't watching this one; it wasn't on my radar at the time. But you popped the trend line, and this just shows you what happens in these kind of extremely oversold companies. They're probably heavily shorted. It probably was back then. A good part of that was probably a short squeeze. It went up 171% after the breakout. It didn't skyrocket right away. It broke out, kind of meandered for a while, and then boom. 170% from the breakout in a matter of a couple weeks. And look where it went to. This is why traders love these gaps. I'm telling you, they're just like magnets. There's an unfilled gap right there. And look where the stock went up. You think that's mere coincidence? The stock rallied 171% and to the button stopped and reversed and fell back down after hitting the bottom of that gap? No, that's not coincidence. That's what traders are looking for, and it dropped 72% from there. But we've come full circle. The divergences that were in place before that 170% rally are only larger now. They've only extended. And so my targets would be this downtrend line right here. First target, and the second target again, that 181 level. They never did get into the gap, so you certainly want to put a target there. I'm going to put it a little bit below where the technically the bottom of the gap or the top of the gap is under that candle, but you had some reactions here about 219. So there's your targets. 1, 2, second one. All actual resistance levels were reactions likely, so you want to sell a little bit below those. In this case, a little bit would be at least a few cents, 5, 3, 4, 5, 7 cents. You want to be safe. 187, 219, and potentially up there to 309 if we really get some traction in this sector, and that would be about a 460% return. GOTU, again, just nice positive divergence building. These guys just seem to be sold out. You know, they were in free fall. Then something happened in the sector. There must have been some kind of legislation or something would have knocked these guys down, because they all seem to have these big gaps right here. And this one, 431, is the magic number. However, with these bullish divergences, and this one's about to be confirmed, I'll probably, after this video, I'm going to consider starting to just layer in, take small starter positions in some of these, because the sector looks so ripe to go. And you may get caught in a dead money trade, so I would not take full positions yet. But you can scale in and then add if it breaks 431-ish and target the top of that gap right there. That would be the obvious target, or a little bit below it. Remember, a lot of eyes are going to be on 941 or so. And look at that. Oh, wow. That's where the stock came out during its IPO right there. This is where it started trading. So that's a big level. And again, it's so big that, you know, a blind man can see it. And as such, we're either going to blast on through it, possible, but maybe reverse a little shy. So I'd want to book profits about, you know, down here, you know, a little bit under it, maybe even you have some reaction lows there, 880. You want to be safe and comfortable. Or again, if it gets, the way these things work, if it rips, it's probably going to be a big, strong upward run. You could get a momentum fueled overshoot. So when you start getting close, let's say about 830 or so, start setting or place a trailing stop. You know, you could do a trailing stop at 8 when it hits 8. Let's just say 830. Put a 20-cent trailing stop loss and let it run, because it may overshoot that level, and maybe if it gets to 841, 941, even tighten that stop up even more at that point. And again, that's if and when it gets there. These guys could just continue down. Some of these companies could go away. They could declare bankruptcy. There's something really happened bad to this sector. And again, I haven't done any fundamental due diligence on it, but you can just look at the charts, and that'd be about a 281% run. Even if we just run back up to this 430-ish level, that's about a 70% return. And so that's why, to me, it's compelling to maybe take little starter positions here with stops below the recent lows, and see if you can get a swing up to that to the top of that range again. iHuman, nice clean, semi-clean, fairly clean downtrend line, bullish divergence, et cetera. Nothing remotely close to a buy signal. This one, I don't know if I'd step in yet because it's still in a downtrend without any signs of reversing, and these indicators like the PPO and RSI are still pointing down, although it is oversold. Last time it was oversold was right here, and it had a little bounce, oversold again. So break of the trend line. 528 being the first target, or if you're swinging it up, if you take a position now or soon, trend line would be the first target. Break of the trend line would be your next buy signal or objective long entry. 528, 650-ish right there, and potentially all the way up here to 962. This one had a big old gap back here, and that's around 960 or so. ZME. Zongmin Education, if I said that right, positive bullish divergence right there, and there on the RSI. There's your divergence line. This is a trend line. There was a little false start, failed breakout right there, but the divergences continue to build. PPO is turning up, and this one could run at any time. And yeah, let me give you one earlier target because we have some reactions right here. 222, 251, and 348. Those are my unadjusted targets there. Let me just spell out what that would mean, because this one looks ready to pop any second. And again, the more of these to pop, the higher the chance you won't get a false breakout. You'll have a breakout that's the real thing. If you get, let's say, a third or half of these all breaking out around the same time, then there's a better chance that the breakout will stick, because that means the sector, at least these handful of stocks, investors are starting to jump into. About 68% to the 222 target. 251 would take us about a 90% gain, and if we go all the way up to that 348 potential target, about 168%. AMBO, similar setup, falling wedge, looks thinly traded to me. Yep, definitely a thinly traded stock. So factor that in. Also low price. So one like this, you have higher risk. It's not as actively traded. It's low price. Market cap on this guy is only about $96 million. But targets be 132, 170, and then 211. YQ, 17 Education and Technology Group. There's your downtrend line. Been building divergence for a while right here. PPO is starting to turn back up. It hasn't crossed yet, but has potential. And let me look at volume. Yeah, not seeing anything big on the volume yet. So it's still in a downtrend. This one, again, needs a little work right here. And I don't have a hard level to show a breakout other than the trend line. If it breaks that trend line, then I'd be looking at some additional targets. There we go. That'd probably be a nice swing target right there. The trend line, and then 315, and then ultimately max target at this point in time about 557. FSH, First High School Education Group. Here's an example. I wanted to leave this up. I just marked this chart up today, but I noticed it's a great example of divergence and how it's not a buy signal. And sometimes you don't rally. Right there, we had positive divergence at that point, right? RSI down here, PPO up there. And that one we did get a rally, but it wasn't, a whole lot, and we rallied right back into resistance as well, 323. We went down, we put in another divergent low there, and again, we did get a rally off it. It wasn't much, it wasn't a lasting bottom. We rallied, and it might not look like much, but let me tell you how much it was in percentage terms. In just a week, this thing went up about 25%, 24. And what we've done is we've extended the divergence. So the divergence continues to build, and we'll probably get a pop here soon, but there is absolutely nothing close to a buy signal here. I don't see a lot in the charts. The volume doesn't look capitulatory yet, meaning I can't really say that's a selling climax, although without the volume it appears like you consolidated here for a while and you see it just dumping now. People are just throwing in the towel on these stocks. Probably taking a lot of tax loss harvesting, I imagine, on these as well going on right now. And so I think they're poised for a pretty good snapback rally. And this one, from where it's at now, and again, we don't have a buy signal, but there's sometimes you just plug your nose and jump in, dive in the water, and hold your breath and take the plunge. Take a shotgun approach. Would be the only thing I would do. I would not put all my money if I was going to trade. I'm not talking my entire portfolio. That never goes in any one stock. I'm talking whatever I allocate. Let's say it's 20% of my portfolio to these guys is what I will ultimately have if I'm fully invested in that sector in this basket of stocks. Right now, I might start out with maybe a 5% stake, and if I do that, just spread it equally among all these names because they'll probably run together. But then you can overweight or start adding to those that break out and give you buy signals, that I mentioned. And so on this one, sometimes you don't always have a perfect buy signal. Maybe there's a little minor downtrend line there that probably shows through on the 60-minute chart. That could do the trick. Hard to say. I'm just showing you ones that look poised to pop. And that's one of them, FHS. RYB Education, here's one that started to take off. So if you can see positive divergence like a lot of others. Not on the RSI, you had it on the PPO there, but you had an extreme oversold reading there. And this one you can see it's a potential selling climax. High volume on that candlestick right there, that doji bullish engulfing candle. Remember I pointed out the bearish engulfings on the indexes? Well, they work in reverse. That's what you call a bullish engulfing. You just have the body of this candle needs to engulf the body of the previous candle, which it did. And nothing but green sticks so far. So that's check one. Or, well, there's the bullish engulfing. So check one came the following week. Check two, check three. Alrighty, where's it going? 240 is my minimum target. I will give you a secondary target right here. That is about $3. So you got 240, $3, and that still gives you, from where we're at now, about 16% to that first target. I'm going to give you another target right here. Yeah, definitely one right there. All right, so that's 268. So to 240. 16% to 268, almost 30, and then to $3, about 45%. Those are your targets for RYB. ZVO, same story. Been building divergence here, at least on the PPO for a long time. Started setting up divergence on the RSI recently as well. Probably looking at a little minor downtrend line here. I don't want to force these lines, but that's probably the best I can give you right now. So probably pop on a break above that minor downtrend line. First target be $1.88. Second target here is going to come in around right about that gap right there, 210. And then do we have another? Let's just leave it at that, because look, if we hit that 210, you're talking a 43% return. And if things get really good for these stocks, maybe take us all the way up here. I'll give you a potential target, just in case, because I suspect if I'm right, you're going to see some, a lot of traders start to pile in, a lot of short covering. These guys can start to move quick, and it's going to feel very bullish. But I just can't say right now. Let's just say that at this point in time, that's my current final target, 210, with a potential target around $3 if I like what I see going forward. AACG, this one's a little bit different. This just has a pretty big support. There's the bottom of a gap. This one had a monster gap the other way, big gap up. That bottom of that gap and resistance was right there about 143. It gapped up and never looked back after that day. It just steadily sold off since and back to that 143 level. So this one you just buy on a pullback to support, and also extremely oversold recently. And the fact that we came down through there briefly through the bottom of the gap gives us this false breakdown. That red candle went through there, probably sucked in some shorts, cleared out the last of the weekend longs, and we're right back on it. We haven't recovered it solidly yet. We're only at 145, and I have a line at 143. But you can take a shot at it with a stop somewhat below, maybe below those recent. I wouldn't even go down all the way to the recent lows. You know what? It needs to hold this recovery, and that's it. So maybe under today's lows, you could take a shot here. Today was low was 135. It's at 145 now. That's a relatively small stop based on where the potential is for this one to run, which is about 223 right there. So that'd be a very, very nice risk reward. Again, the nice risk reward ratio, what I mean is the percent that you're risking, about 6-7% to make 54%, is offset somewhat by the probability of success on this trade. There are other trades that I have more confidence they're going to pan out, but that's what I factor that in. So if I'm going to take a trade with less probability of success, I'll typically only do so if the risk reward ratio is that much better. In other words, much better than a typical 3-to-1 RR. If it gets going, you could probably take it up here. Yeah, let me give you a second target. Sometimes I do these videos and then they don't move for a few weeks and I kind of don't follow up and they all take off, and I know some of you guys take them. So just in case we get some nice traction in the sector, I'll give you these potential max targets, and that'd be about 145% run up to 346. STG, Sunlands Technology Corp, downtrend line right there. Divergence line, bullish divergence, PPO starting to turn up, hasn't crossed over yet, but so on this one I have 512 as a level. Also have some minor resistance there around 450, and having a harder time with targets on this one. Let me remove these lines, delete that. That's not what I meant to do. I wanted this. Yeah, there you go. 450, 512-ish, 568-ish, and ultimately one more here about 679 STG. LAIX, same story. Positive divergence on the indicators building. Downtrend line there, and the big level is 84. And what I like about this, I'll say this, high risk. This is only a $37.2 million company, so very small or micro cap. However, it's dropped below the $1 level back here. That was around 107. It had resistance. It's been trading under it. I don't know. Maybe they've already gotten a delisting notice. That's possible. But what happens when stocks drop below $1 a share? They typically will receive a delisting notice saying that if your stock doesn't get back above $1, you'll be delisted and moved over to the over-the-counter bulletin board or pink sheets or wherever they go to die. So what happens is if it can recover that level, then that's quite bullish. Usually then you see a lot of buyers come in. Plus the company will do whatever they can to defend that and get that thing back above that $1 before the delisting kicks in. They have a while to do it. So there it is. If we can break the downtrend line, 107 be your first target. Second stop about 140 would be my second and final target. That's big resistance right there. Again, so if it goes from where we're at now, 79 cents up to 140, you're talking about 74% run. And that is it, guys. This one I didn't have marked. It could run, but that was the ones that I went through up to LAIX. Were the ones I had flagged. So just potential trade ideas. And again, if it's not your cup of tea, they're not the, they haven't really taken off yet. So more of trade setup, if you will, in that sector. Let me wrap this video up here, and I'll follow up with an update on the equity markets and anything else that stands out today. This has been Randy Finney with Right Side of the Chart. Have a great day.